It looks like it's probably going to be a bullish day to the upside. I didn't want to risk it with this ace. There's some bearish kind of energies here. We're at the top of the RSI. We're way overbought here on a 1 minute chart. We got some room to go, it looks like, on a 5 minute, but we're probably tapping out, right? It's like 9:36. We've got a decline somewhere here in the first half hour after bumping along resistance sideways. And then there's a crest, an overbought crest that we sell off from, right? So there's this overbought crest. At least on a 1 minute, it's overbought, right? So I took most of my profits. I'm at 4,100 now. I started with $600. Basically liquidated half of my SPC position and used that amount of money to open up options in the midst of the decline. Now I'm at 4,100. I was at 1,300 a week and a half ago. I still have, so I sold my 414s. I had 3 414s. I sold those for like a 20% profit, and I held on to my 412 because it's a much better position. I wanted to get rid of the 414s because I didn't really like that price level. 412 is much better. And then you can see I haven't really done anything with these vertical call spreads because they're so far out of the money. There'll be small losses. There'll be small losses. But thus far, I haven't taken any losses since I started trading, and I'm pretty excited about that. And you can say it says open net gain here 1,000, but that's because I've taken all the profits off of the table. When you look at it from the standpoint here, it's a much different story. But I have to be very, very careful. Like pretty much, my idea is pretty much just to take positions off the table today because I only have 3-day trades. If I'm very careful, I might put on a short position, like maybe a partial here midday around noon. And then if we're at a high at like 2 o'clock or 2:15 or so, I would do it again. I would like finish off that long position. We've got this peak that we hit tomorrow, right? It's a full retracement higher and then a move higher and then a full retracement back down, excuse me. And it's nullified, meaning that the chart behavior kind of makes the high irrelevant. I think probably what happens is in the morning, we open up at the lows that we were at on Friday. That's my sense. Either that or at the end of the day with this ace of discs, but I'm not so sure about that. Although these are both cross-reading congruencies with the low significator again, remember. There's also one for the high significator. That's why I consider this to be a tricky day. It's definitely a mixed day, but I think overall it'll be to the upside, which is unusual for the disappointment card, but the disappointment card is nullified. Sometimes when you see it so overbought, it means that you're going to see it kind of do that. Like it's going to continue to go higher, and you're going to see it kind of dance there for a bit before it comes down. And that may very well be what happens. But there is a decline, I think, approaching very, very soon. Maybe like the... like 945, 950. Guys, if you're new to the channel, if you'd been following along on these lives, or I mean, this S&P October 30th reading was posted or it was created, excuse me, July 28th, 2023, guys, being used today. I utilized it today to profit, and there you go, guys. 9:40, so I was maybe 5 minutes early. And I think maybe what I'll do actually, so rather than sell my 412 call around midday, which was the original plan, I might sell against it because 412 is a really good price level if you ask me. I might sell against it, but in order to do that and make it not a day trade, because right, oh no, it wouldn't be a day trade if I sold against it. But if, let's say, if earlier this morning I had bought back a 413 call expiring on November 2nd, right? It was a vertical. I bought back the short position of it, right? In order to avoid a day trade, what I would do is I would create a diagonal spread or a calendar spread rather than a vertical spread, because then I'm not going to be selling the same contract that I just bought back, and that allows me to keep the 412 on the table. Basically what I'm doing is I'm just shaving off the cost of this 420, or excuse me, this 412 call by selling against it, buying back, selling against it. Still going a little higher. So remember, overbought crest, and like I said, when you see it go up this overbought, in a lot of cases, you'll dance around there for a bit. And the best way to look at it is to change the candlestick from like 1 minute to 5 minute at that point, and then you get a better gauge of when we're going to turn around. We are pretty toppy right here, though. See, we're dancing up on the edge of RSA on the 5 minute chart now. I know, I love you too. You're the best, Hermes. You're good luck, you know. You're good luck pup. You're good luck pup. You like the belly rubs, huh? Yeah. Are you gonna go to sleep? You're gonna fall asleep right there like that? Yeah, you're funny. You're a funny guy. Appreciate it. It was luck. If I was an epic trader, I'd be rich as hell right now. So, you know, I think this time around something's different, though. I think this time around it's my time. I just have to be very careful, you know? I'm not right all the time, and as soon as you get that ego trip and you're like, oh, I can't be wrong, that's when you bet big, and that's when you lose big. Remaining humble is super important from a mentality standpoint. Not just the mentality standpoint, but when we're talking about trading from a mentality standpoint. Still going, but now we're in overbought territory on 5 minute chart. You could even take it to like a 15 at that point if you wanted to. I don't think we're quite at the point we need to take it to a 15, but matter of fact, when we look at it from a 15-minute chart, it's very possible we come up to this 200-day moving average at 415.82 ish. That's actually what it's looking like we end up doing, right? And there's going to be this failed attempt to break through resistance that we expect to break through based on technicals. So what you can the completion card in the high position helps to tell some extra stuff about the overall like pattern of the day, because often when you see the completion card as a high, it's not like what it's indicating in most cases is that you don't end the day at a high. The completion card is kind of like a turnover type of energy, so it starts out with this rally, but then the rally kind of like turns over. I don't know, correlations. Wow, no double correlation. I should have marked that off. Oh, there we go. That's what I was looking for. Boom, there we go. That's what I wanted to see. So what I'm doing is these translucent, when it's a thick translucent highlight, it's basically a correlation from the prior day's significator, which I do when it's nullified. I look for it in the following day. And that's what I'm looking for. There's a trade here, probably close a short position. So I'll open up a partial short here. And then if we're at a high there at the end of the day, I'll complete, or probably between like 2 and 2:30, I probably complete that long position. And then if we end up at a low at the end of the day, or trough, I'd complete that short position there at 2:15. And then at the end of the day, if we're at a low, I might open up another long position. And I was thinking about selling against the 412 call, but it's a November 2nd, so I'm just going to sell it when I feel it's time to sell it. By the way, guys, this November S&P 500 reading, if you were on our free mailing list, you would have got an email to your inbox for free. as early as the first like 4 days of the month of October. If you got early access, you actually, or as early as the 7th day of the month. If you have early access, which you get here at our services, SO Meta Posts, then you would have got it like first or second day of the month. You would have had access to it. Right here, early access to our posts. Click here, $29 a month, $249 for the year. Great way to get back to the channel a bit, help support the channel. And so you see this behavior here, guys, in the pre-market. We have this correlation in yellow, translucent yellow here. That's from the preview card, which is the Valor card, bumping along resistance, right? So bumping along resistance sideways. Then we break through, and then we see it again midday. We should see more bumping along resistance based on these correlations. But I think we'll probably hit this 200-day at roughly 415.60-ish before we turn around. Although we are definitely very close to turning around, so it may not happen. I think it will, but it may not. You know, because what we have here is a failed attempt to break through key resistance that we expect to break through, right? Hey, Nature's Dwell. DXY. Why is it doing it like that? That's weird. I don't know why it's showing the chart like that. These are daily bars. It must be glitched, unless I'm missing something. Anyhow, DXY, which is the dollar index, guys. Alright, so we have a brief peak that's easily missed, followed by a decline through multiple supports today. On Tuesday, a rally that offers an opportunity to open up a short position or close a long position. Wednesday, we sell from a crest down to and through support. We do a U-shaped reversal below that support. They come back and reuse it as support. Thursday will be kind of like a flat sideways day. There may be important resistance highlighted there on a multi-day scale, and then Friday, multiple failed attempts to break through key resistance. Usually that's kind of like a sideways or a bearish day at the end. That's DXY, guys. Hey, AV. Oh, I got somebody at the door, guys. I'll be right back. Yeah, you can let him up. Yeah, thank you. Why it's not on Do Not Disturb, I will never know. It just messed up all of my audio.
Harming none as it comes my way.
Alright, I got somebody at the door. realized I forgot to put on a shirt. But I gotta have my coffee. Oof. Hopefully everybody had a good Halloween weekend, even though it's not quite Halloween yet. Alright, so Tesla forecast unexpected move higher. Is that daily still on track given we are at end of month? I'm not sure what you mean by is it on track given we're at end of month. What does the end of month have to do with it? I'm missing something. I already did all of the S&P for January. Working on February, probably Wednesday. Tesla, why is this all out of order? Hermes, it's just coffee, man. You don't want it. It's just coffee, goofball. You don't want any coffee. Well, I get that. I just don't know why, what the significance of the end of the month has to do with it. But let me take a look. Oh my god, this coffee's awful. Ugh. Way too sweet, my god. Yeah, similar to the S&P. Yeah, but it looks like it's on track. It's the prudence card, so you want to be careful today. And then there's a notable reversal tomorrow. So we did just miss it, and then we're turning around here. This is why I don't trade and do what I do for the most part, guys, because it takes too much time, and like I'm paying attention to questions when I should be looking at my position, you know? It's not easy to do. It's not as simple as just knowing up and down, and everybody's so ignorant about that. They're like, oh yeah, where's the money? Yeah, well, you try it, okay? I'll tell you yes and up and down, and you try it, and then you tell me where the money is. Not that easy, my friends. Doesn't mean I don't know what I'm doing. And that's usually like the biggest argument. Like if I'm at the bar and somebody asks me what I'm doing, their argument is, oh yeah, where's the money? They're so ignorant. I'm like, dude, there's like 1,700 predictions. You could go look at it. Like, the proof is overwhelming. Just go look. And they're like, yeah, but where's the money? Where's the money? They're so dumb. So dumb. Oh, that is our services, Esometa Posts, monthly subscription. Click here to order. And then you click on the 30 days access to all paid monthly predictions, including Amazon, Google, and as of January, it'll also be including NVIDIA. Appreciate you, It Was Luck. Definitely need the support. Dollar Tree. So Dollar Tree, I have a 2024 that I started. Where am I going? But it's just the photograph. It's not marked up or anything. Definitely looks like a super bullish year, but there is a notable decline into the lowest low, like increasing with momentum. So it's not going to be all to the upside. And the high significator is the Ace of Wands, indicating that we want to get out at the high or open up a short position at the high. So there may be some real bearish kind of stuff towards the end of this, but the overall theme is the Fool card mixed with the Victory card. So it's super bullish. I might wait till February to get in, like the cusp of January, February. And I'm gonna do the Dollar Tree reading pretty soon. I did that. God, I did that. September 24th is when I laid the cards for this reading. All right, so this is pretty bullish indication. Like, we're almost at lows, guys. We're almost at like oversold territory, right? We haven't gone south of like the moving averages, which is an indication to me that we'll probably turn around and see some higher movement relatively soon. With our first like real peak, well, I guess that you can consider that a real peak, and that's the Satiety card right there between 10 and 11, right? What time did this take place? 9:57. Oh no, I must be full of shit. I was off by 3 minutes. Like, come on, guys. You know, they're so dumb. They're so dumb, and they'll always be dumb because they don't want to open their minds and look. All you got to do is look. It's like this dude at the bar is like, dude, there's 1,700 predictions that you can go and look at a stock chart and determine if I'm full of shit or not. Why would I be sitting here lying to you? Go look. Oh yeah, but where's the money, man? Where's the money? Like, so dumb, dude. It's so dumb. Definitely not with you. That's what I said, start answering. Definitely not with you. Again, this was done on July 28th, 2023. And there we go, turning around again, right? So in the midst of this move to the upside, I'll be looking for an opportunity to... We should do some bumping sideways along resistance. Oh, it's a little early for that. I feel like we might see a little bit more to the downside before you really turn around here. But when we have the next big move to the upside, we should at least come back to the highs that we saw here. I think we'll probably go higher around noontime, and that's where I'll open up a partial short, possibly close my long position. I have to be very careful about my if I open up a position, I have to be very, very careful about my decisions, because I already used my 3-day trades, and I refuse to lose money just to avoid a pattern day trading call. It's a rookie move. That's what they want you to do, guys. That the whole purpose of the pattern day trading rule is to keep the little guy little. They say it's to protect you. That's bullshit. It's to keep the little guy little. And it's extremely, extremely difficult to get to figure out how to get around, because it affects your decision making. It affects the amount of money that you like. It's just, it's not cool. And then on top of that, you all those poor suds are like stuck in the market overnight because they're avoiding day trades, and all of the market makers know that, and they gap down when all of those people waiting to get out were profitable at Friday on at the end of the day, but they had to stay in overnight, and the next morning they're all at a loss because the market makers know they're stuck there and they take the opportunity. Pattern day trade rule is probably the most unfair advantage in the entire industry, and it will not go away, guys. So I have a solution for it, a workaround for it, but it requires quite a bit of money and some coding. It's step 3 of my take over the world scheme. Oh, well, I'm glad to hear it, guys. It's not always easy for me to get there and do it in the morning, but doing my best. Like today, I totally, if you were on at the beginning, I totally forgot to put on a shirt and tie. I'm not a morning person. Never have been. Well, that's not true. There was a while where I was, but it's been a while. There was a time in my life where I'd seen very few sunrises, and I'd always wake up, like almost every day I'd wake up and it'd be like about to be dark out. Depression is a dark place to be, my friends. In any case, and one day I decided, I wonder what would happen if I started changing my lifestyle so that I was seeing sunrises every day instead of sunsets. And I photographed like probably 250 individual, like unique sunrises over like a year period. Man, that year was so amazing. It's right before I left to go to California on my kind of like law of attraction cross country experience. So I'll probably wrap it up here, guys. But what we're gonna see, we're still gonna see some downside here. Like I said, well, I would expect to come pretty close, if not hit the 20 mark on RSI on a 1 minute chart. Might come close because I've noticed that we seem to be doing that quite a bit, coming close and then turning around. So it might be that we come close and then turn around. But I think we've got lower to go into the RSI. For those of you that don't know what RSI is, it's Relative Strength Index, and it measures how overbought or oversold the market is, or the underlying. So in the case, underlying is the SPY we're looking at, right? So how overbought or oversold. Overbought means way too many people have bought it, the price is inflated. Oversold means way too many people have sold it, the price is under what it should be. And on RSI, it really depends on the stock that you're looking at. Like, they all have their own behavior, so you have to get to know each individual stock, and that's why it's important to just stick to a few when you're trading and not go all over the place, because you'll learn the behavior and that'll help you. But so the behavior here is like, we kind of come close to the bottom when we're oversold, right? So we should see that, and then that's on a 1 minute. If we look at like a 5 minute, see, we've got a lot of ways to go to the downside, right? See, that's what you want to do, is you want to get comfortable and like remember to look at different increments of time, because it will tell you different things. It will give you different information. The 1 minute chart's going to give you the earliest indication, but often the earliest indication is a fake out. It's a false indication, and by indication I mean of direction, right? But it's the earliest indication. So once you see the early indication, you want to go into something like a 5 minute chart and look at it from that standpoint, because that's not as early. It'll give you like a more truthful estimation of if there's a turnaround or something. When we get to the lower end of RSI on the 5 minute chart, take a look at a 15 minute chart. See, on a 15 minute chart, there's a bit of ways higher to go to hit that 200 day. I'm curious how much I left on the table with those 414s. Were they November 2nd? 391. I want to see what the chart was at. So today these were up as high as 450. I want to see how much I left on the table. I knew I would leave some on the table, but I wasn't concerned about that. I was concerned about taking a profit. So like 75 bucks times 3, like about 225 I left on the table. It's a little bit, but not much. I mean, it was a solid game. And that's just it. Like, it wasn't like, why risk it for just like that little? It wasn't even $1, you know. And I also bought back. If you guys are wondering, I sold I bought back the put credit spread that I had, the vertical credit spread, put spread. I bought that back first thing in the morning because vertical credit spreads are just like, they mess with your margin and all sorts of stuff. You don't want to get into that type of stuff unless it's like completely necessary. And again, the reason why I got into that credit spread was because I had opened up a 411 put at the wrong moment in case we had further to go, and we didn't. So in order to cap the loss on that, or actually turn it into a gain and not make it a day trade, rather than selling it, I sold against it, knowing that we were going in the other direction, right? So I ended up making a gain. Right, so I sold my oh wait, I want the 411. In any case, I ended up making a little bit of money on it, because what I did is I sold it at a higher price and then bought it back at a lower price today. And by doing that, I avoided a day trade. I avoided a loss. I actually took in a little bit of money on Thursday, more than I gave back today, in other words. And that's how a short works. You take in money first, and then you give it back, and hopefully it's less when you give it back. SMH price action. Hey, Joe. Ooh. That is some dangerous territory right there. Yikes. There's either a reversal there or there's a big drop. Based on all that red, I don't know so if the reversal's looking so hot. Interesting. So I got the Lust card for today. So we either saw a big move higher at the beginning of the day, or we're going to see a big move higher. Let's see here. Oh, well, that's a pretty big move. Yeah, that would be the Lust card there. And then the Fool card. So we probably have a pretty sharp drop tomorrow, like a gap down. Sideways S formation within a channel, probably to the downside on Wednesday. All right, we've got erratic behavior back and forth through the same price level on Thursday. In the midst of that, we revisit a crest. That's an important opportunity. There's a unicursal energy there. And then it looks like a failed attempt to break through key resistance on a multi-day scale on Friday, followed by a decline through key support again on a multi-day scale. So it's kind of mixed, but overall it looks to the downside. Amazon. Nice moves. Jeez. I'm a head bopper. Sorry, guys. No, I would say this is going to turn around here. This is going to turn around here. With a gap down overnight into another trough. This might have already turned around. Like it's a near overbought peak that we sell off from. And that would be near overbought peak that we sell off from through multiple support levels. I probably should. I would have actually sold my 414s. I thought about it, and probably what I would have done, but I was distracted because I was answering questions. So I'll just have to sit tight, and hopefully we get this move back. Sorry. Hopefully we get this move back. I think we will. It's out of a trough. I think there's a trough there, right? And then there's a notable... Yeah, see, we're at the bottom end of this RSI now. Remember, we want to take a look at a 5-minute now. See? We still got a little ways to go. And then also, it looks like we would most likely want to meet the 200-day and the 100-day are meeting here. Now, this is important, guys, what we see here. The 100-day is going upwards, possibly crossing the 200-day, which is a strong bullish indication. More important to look at it from the standpoint of like a multi-day. You're looking for things like that. I think that one's called, or the 50-day through the 100 days called the Golden Cross. I believe it's either that, or it's the 50-day, the 100-day through the 200-day. All right, so Amazon. I think it's they're all following a similar thing where it's kind of like mixed, probably mixed to the upside into the second, third, and then there's a drop on the third. Hey, Conrad. Yeah, so the death card's kind of an interesting card where it can be very bearish, like a big decline into an important trough, or it can also indicate like the bottom and like a reversal point where you would move to the upside. It's usually a big decline into an important trough, but what it's really speaking about is the important bottom or the important trough. So Ace of Swords, so a lot of volatility, a lot of price change there. The Ace of Swords is kind of hard to determine directionally, but on a multi-day it could mean like a new, or like it could mean like a top of some kind. Let me see. Oh, LOI, right? I got the Ace of Swords again. There's going to be a lot of volatility, so based on the chart behavior, you should be able to play both directions, but hard to determine if it's going to be a positive or a negative day there. Probably have a turnaround here. Oh my god, this coffee is so bad. It tastes like somebody like dumped like a half a bottle of like almond extract in it. Oh my god. Yeah, I'm not drinking any more of that. So you know what, man, those 418s I think are the wrong expiration. Yeah. See, if these were November 12th thirds, these 418s and these 419s, I would buy back the 419s right now. But they're October 30th, so they're going to be pretty much worthless. That's why I didn't buy back the short. But what I did is I capped off the loss that like a big loss, basically more than half of the loss was contained. Same thing for the 420s and the 421s. However, I might actually buy back the 421s. From the standpoint of where we are now, if I cost average down, I'd probably be able to get out for a small profit at least. Yeah, appreciate you, Conrad. Glad to see you, my man. Yeah, so end of the day, what I'm doing is here around noon, if we're at a peak, I'm going to open up a partial short position. And then around 2:15-ish, if we're at a high again there, I'm going to open up a partial short. If we're at a high at the end of the day, I'd add to that short. If we're at a low at the end of the day, I would open up calls. And then tomorrow morning, I want to close probably right at the open. I want to close out of my short position if I can for a profit. Right, so now like things have turned around, right? If I hadn't sold my November 14ths, I might right now be selling them for less money than I sold them for. You got to remember, like, the market doesn't just go in one direction. You're either right or you're wrong. You can be right and then wrong and then right and then wrong, and it's like, it's not official until you decide to make a move based on that. Thanks, Conrad. Appreciate it, my man. Have a good day. I'm probably going to cost average down these 420s. Hey, Al. Algo's almost done. In process. Appreciate you. cautious. But I believe it's yes. Oh wow, that would have been a nice drop right there. Can't believe I missed that. I totally would have bought a call there. And this is what people who don't trade don't get. It's like, oh, you're either right or you're wrong, and that's how much money you make determines if you know how to analyze. They're so far from each other. It's not even funny, guys. You could know up and down every single moment, every instance of the day, and still lose money because there's so many other aspects to trading. Like, what if you've got a doctor's appointment? How many doctors do you know that have appointments outside of 4 p.m. or after 4 p.m. or on a Saturday, right? Like, what if that's when you need to make your trade, when you're at the doctor, right? And okay, you bring a tablet with you. Do you have ADD? Are you distracted? Is the doctor talking to you at the moment that the trade needs to be made? What if your power goes out? You know, I mean, there's so many variables that make trading so much more difficult and complicated than people who've never tried it will ever realize, right? Knowing up and down is like the smallest, simplest component, and like everybody thinks that's what it's about. If you know up and down, you make money. If you know up and down, you have a chance to make money, right? You still have to survive through all of the variables that life throws at you. I think I'm going to buy one here. What I'm doing is I'm cost averaging down the price. Right now my net cost basis on these 420s is 365 minus what I sold against them, 241. What I'm going to do is I'm going to cost average down now on the long position. And that brought my net cost basis down to 291, right? Minus the 241 I sold against it. So these are now, that spread there, if it expired in the money, would be pretty profitable, but that I don't expect it to expire in the money. What I'm looking to do is cost average down again. If we go lower on these, I'd cost average down again, and at some point I'll probably get rid of these 421s. And the reason being is that these are so far out that it might at some point look like they're going to be in the money, and when people expect that they'll be in the money, that's when the price goes up. And if I've cost averaged down enough, I won't take a loss. I'll take a gain. But it's very, very risky maneuver, because once you're in it, you've got all these extra contracts that you normally wouldn't have had, and it's like, oh man, if I just hold on to these, I might make so much more money, and you forget that the whole plan was just to get out at even, rather than take a loss, right? And then what happens is you often miss the opportunity to do that, get out at even, because you got greedy. I've done that so many times. But that's just it, guys. That's the point, is that the vertical, the 421s I sold against these 420s so that I wouldn't take such a big loss when I determined that we were going lower. Right now, I want to cost average them down and try and get out of them for a profit. The short position that I sold against is already a $250 gain. So if I bought it back now, it's a $250 gain that I took in, right? And then if I've cost averaged these down enough and we get a good move in the right direction, then they will no longer be a loss. And this is how I've avoided taking any losses thus far since I started trading a week and a half ago. I turned that $600 cash and the $400 of leftover of SPC into $4,000. Was 4,100 this morning. Man, that little bar is so sneaky. Wow, I can't believe I missed that though. See, that's a perfect example. Like, what if that was when I needed to get out of something? I looked away for a moment, right? Nobody's gonna understand that doesn't trade. They're gonna be like, oh, you just didn't know right and wrong. Like, you know what I mean? It's so ignorant. Will SHIB have a run up in November? There's a SHIB reading. Just check out the SHIB reading. If you go to our channel, right? Here. See this search bar right here, not this one up here. This searches all of YouTube. This bar right here searches just our channel, and you can just type in SHIB. And it'll bring up all of our SHIB readings. Plenty to look at. We're almost at 2,000 predictions on YouTube now. I know. So at the end of the day, if we're at lows at the end of the days, it's hard to determine if we're going to be at a high or a low. There's probably some volatility going on here. Maybe we go from a high to a low and back to a high. But I would be, if we have opportunity at a trough there, I'd probably cost average down again. Or if we go into this territory, I'll cost average down one more time. But remember, the idea is not to like wait until they're expiring in the money. The idea is to bring down the cost enough that when we have a big move in the opposite direction, the loss is evaporated and I get out at even. And that's how you can handle with options. You can handle what would have been a loss. It's very risky though. You have to know what you're doing, guys. All right, guys, with that said, I'm going to roll. Thank you so much for watching, being on in the morning with me here. Check us out at 3 p.m. Eastern. We're on every weekday at 3 p.m. Eastern. We're not necessarily on every morning, but we're attempting to be. But we're on every weekday at 3 p.m. to 4 p.m. Eastern. So see you guys later this afternoon. Best of luck on the trades, guys, and I'll see you then. Blessings to all.